Hemendra Hazari is now joining us. Hemendra, as far as banking companies are concerned, if we only look at Yes Bank, the numbers were like picture perfect, and there is absolutely no reason after that to go ahead and look at any downgrades possibility for the banking space.
Yes Bank appears to be, hitting the boundary every quarter and far even, meeting and even slightly surpassing analyst expectations on all parameters, whether it's be profit or asset quality. So it is, looking at those numbers, one would expect that the banking industry is booming, that the economy is booming. But unfortunately, as we know, that the economy is really quite stagnant and a lot of banks are facing a lot of problems. So we just hope that the type of numbers Yes Bank reports will be sustainable in the future as well.
And that's the reason why it's not seeing any incremental buying, because everybody knows they want to go out and raise funds. Everybody knows that these numbers need to be sustainable for a valuation increase from here on.
Very true, because normally any company which is coming out with a large equity issue, you're bound to see very good numbers just prior to the issue and normally even immediately after the issue. So for the next 1 or 2 quarters, we can expect numbers to continue to be very good in Yes Bank. But the concern always remains that whether it can sustain itself going forward. Because let me remind you that even ICICI and Axis, until the 4th quarter numbers of last year came out, they were also showing some very robust growth. And suddenly at the 4th quarter, they seem to have hit a roadblock. And once you hit such a roadblock, it takes some quarters to recover from that.
Right. Can you just talk about banks that will declare tomorrow? So Axis will start tomorrow. So you think that will be the first big corporate banking company that will declare numbers, and that should be interesting one?
Oh yes, it will be very interesting because so far everyone is watching the deterioration from their watch list and how those standard assets, which were standard for a very long period of time, will suddenly start deteriorating or not. And the first quarter, only a very small amount, deteriorated. And now we also have to see the impact of the SR Global exposure of Axis Bank in the second quarter and how they will treat that account. Because according to media reports, such a development has taken place after the second quarter.
Right.
But that issue seems to have got resolved.
But, if we just look at a company like Axis Bank or maybe even a SBI or Bank of Baroda, 2 or 3 quarters, constant decline, constant increase in gross NPA, constant increase in provisioning. Do you think now the margin of error is very, very limited? Any further increase in provisioning, any further increase in gross NPA, and the street would not believe that the worst is over?
No, that is true, but the street has been saying this for the last 1 or 2, 1.5 years, that the worst is over and there's going to be recovery, don't worry. And what we have seen really has not justified that view at all. So now there is, as you said, very less margin for error. And I really see a lot of pain still to come in the banking sector, not just from the corporate loan, which everyone is focused on, but on the retail side. Because the retail side today has very less NPAs, just like infrastructure had very less NPAs about 3 to 4 years ago. And there's been a humongous growth in retail credit. This whole issue of loan against property, which I've been cautioning about, is now surfacing because end of the day, real estate is not getting sold in this country. There is a huge inventory piling up. Retail income is also going to be squeezed with this general slowdown. So it is bound to have an impact on the retail loan portfolio of banks.
Right. As far as NBFCs are concerned, a lot of NBFCs would be declaring today and tomorrow as well. For NBFCs, rates coming down in the system, that is the biggest key positive?
Yes, because on the wholesale side, because most of their funding is on the wholesale side and the banks are one of their principal funders. So with their rates coming down, you see, we can expect the margins to expand. And so far, they have been the favorites of the stock market. Their share prices have done extremely well. But end of the day, again, they are lending in the same economy that the banks are lending. So this type of, strong profit growth, the kind of low NPAs that they are reporting, it is all very good. But the point is, if the economy continues to be stagnant, then even at some point in time, they're also going to be impacted.
But as of now, they are in a sweet spot and you don't expect any correction because rate outlook is decreased further?
No, that is true. But, going by numbers, even Yes Bank is in a sweet spot. So I think one has to just see whether, it is sustainable. yes, because of the rates coming down, the NBFCs do have an advantage at least on their cost of funding and therefore on their margin. But just one has to be very cautious because all the share prices also have gone up. So all these factors have to be taken into consideration.
Right. A lot of buzz has happened around the two-wheeler, four-wheeler pack. Let's first start with the two-wheeler, four-wheeler financing. So something like a Muthoot Capital, something like a Cholamandalam. You would be interested into these names because at least the sector or the underlying sector over there is growing?
No, that is true because when you look at two-wheeler, four-wheeler, you're seeing that, the sales growth is there. And many analysts are looking at these numbers and saying, oh, these are the green shoots and this will, be critical for the decisive economic recovery which will come. But my point is this, that most of these producers and manufacturers of two-wheelers and four-wheelers, they either have a very captive financing arm or they are tied up with some banks to finance the purchase of their output. So therefore, a lot of the growth that you're seeing in their production and sales is really coming from financing. And that is one reason why you're seeing the consumer durable space doing much better than the non-consumer durable space. To me, it is really coming because of cheap financing. Now, here again, there is an issue that it cannot continue indefinitely if the economy does not really recover.
But, the underlying demand seems to be strong, even though it is because of attractive financing opportunities which are available.
No, that is true. But if you are giving, cheap financing, then there is an incentive for a person to buy. Now, obviously, there is also some demand for them, no doubt. But if you're making finance is a very critical tool and a trigger to stimulate growth. But, if the underlying economy continues to stagnate, then that trigger will not lead to a sustainable growth or a sustainable boom.
So you would be cautious right now or you would wait for a couple of more quarters to see the numbers?
You see, you have to wait for a couple of quarters because we have to also see how the overall retail financing portfolio of banks is doing. Already one credit rating agency is now sounding the alarm bells on at least on the loan against property. Now, is that going to be just a one-off segment or is it slowly start filtering down to your automobile finance as well? So these are things that one has to really watch and very carefully monitor. And the whole problem today is that, whatever sector is even doing somewhat better than the others, but the valuations have really surged in that sector. So on the valuation front, there is very little margin for any type of error.
Right. So what do you do? How do you play this recovery? Would you go with the NBFC focus towards auto and two-wheelers, or you would actually play it via the two-wheeler names?
See, I would prefer really to play it at least by the two-wheeler names and the manufacturers, because I think at least their accounts, the better cross-checks one can do. In a bank or an NBFC, it's always very difficult to actually check out the asset quality until one fine day someone, the bank or the NBFC announces some disturbing news. So in terms of transparency, it is always better in such cases to go with a real hardcore manufacturing company in this type of economic background than with a financial company.
We had a very interesting conversation this morning with one of the market veterans, Ramesh Tamani, who said that auto ancillary is operating at an all-time high capacity or at a full capacity. How would you look at it? Do they need more investments and that's why one has to be cautious, or they would try and increase the prices because of which the sales and profit would increase?
See, when anyone is operating at 100% or close to 100% capacity, normally it should result in pricing power for that entity. So we have to really see, do they have pricing power? Because normally auto ancillaries did not have pricing power. It is it was the major auto majors which had that pricing power. So we have to wait. Now, if they do have pricing power, the auto ancillaries, and that means, mind you, the auto majors are able to increase prices and get that type of demand for that. Somehow, in my view, looking at the overall economic situation, I really don't see that to be very sustainable, that they do have pricing power. And if you're operating close to 100% capacity utilization, then you should be thinking really of expanding capacity and therefore, taking term loans or using your own funds for that. So I've yet to wait and see whether they're making any major announcements for expansion of capacity. Because mind you, in the economy, by and large, in the manufacturing sector, you're operating at much lower capacity utilization, which tells you that in the economy and the manufacturing, there is a paucity of demand.
Right, but a lot of these auto ancillary are very high export driven, or recently their growth has come in from exports, acceptance in some of the other global markets. That is a space where you would be interested.
Under normal circumstances, yes, and if one seeing in global growth being upgraded, but unfortunately, what we are seeing is that some of the large economies like America and even Europe, they are showing some signs of weakness. So therefore, you have to wonder, is it the African countries where some of our two-wheelers, are exported to, are they going to be much better than what they are? But in general, and this is what we have seen with IT, one is not very optimistic about global growth.
But in IT, at least you have the valuation comfort because they have not rallied at all.
Now that is true. That is, very true. Because some people are saying that there is, because of that, some of these IT companies are still buys. But unfortunately, from what we've seen from the domestic mutual funds, they seem to have reduced their overall weight in the IT industry. I would just also like to add, as fallout from this kind of IT, that it has a very material impact on your balance of payments, because IT remittances and what your earnings have contributed to financing your current account deficit. And if there's a significant slowdown persists, you'll have issues with that, combined with the oil situation in the Middle East, and you're getting much lower remittances from your workers there. So this can have an impact on your overall balance of payments, because these were two critical segments which were paying for your trade deficit. So this is something which has macroeconomic concerns as well.
Right, Hemendra, thank you so much for taking out time for us. Always a pleasure talking to you.